All right, traders. Happy Thursday, everybody. Welcome to Charts and Coffee. Hope everyone's having a good morning. GDP came out today, and it was really interesting to look at the GDP response. Let's take a look at that 5-minute time frame. Let's look at three charts: S&P, the 6E, the euro, and bonds. Let's take a look at those three charts. This is the 830 candle. Initially, a move lower. Initially, risk aversion, right? Risk off, as it's known. And then we're starting to see, after that reaction, a move higher. And that move higher is very interesting because when we take a look at the daily time frame, we are clinging to the equator. What is the equator? It is the 200 period exponential propulsion. This particular indicator is also accompanied by one of my favorite price patterns. It's the one that I use a lot. Those of you in the futures room, those of you in the Sector Secrets Mastery, you know this one. Minor low price pattern. Looking at where we could be taking out tomorrow's high, keep an eye on that one. It would have to happen after ideally 10 o'clock. And I'd love to see that hold into the close. But this is a very, very interesting bullish pattern that we're seeing on the heels of GDP. Now, I know, let's not get ahead of ourselves. Tomorrow we have a far more important hot zone, and that is the PCE, the Federal Reserve's favorite little imaginary inflation number. Look, gang, so many folks ask what's real, what's not. Gang, it doesn't matter. Whatever we react to is the reality. Reaction is reality. And so this is where watching bonds is going to be really important. We had a conversation yesterday. We have this trader meeting that we do. And one of the things that I said is it's not enough to look at equities rally. We really have to see the euro rally. We really have to see the long bond market rally. And that would be confirmation of the risk appetite returning as we have a better idea of what the Federal Reserve is going to do with rates. Okay, so that's what's happening with the GDP. What's happening tonight? If you don't already know, tonight, daily price movement ranges, which time frames are working, how to automate levels. Tonight, 8 p.m. Eastern, 7 Central. I'm sure it's some great time in Jamaica too. We're going to be together for that. If you cannot attend live, that's cool. I'll miss you because we do a lot of Q&A. That's one thing Trish and I do a lot of. We'll be doing it right here in the office in terms of answering those questions, showing you what I've been doing, and testing, I'd say for 10 years, because the DPMRs have been around, but we've been absolutely in hardcore test mode for 10 and a half months now. So super, super stoked to talk to you all about it. One of the things that a lot of folks have been asking, and we'll talk about that tonight, is, okay, Rag, okay, I know you have something that's working, but tell us how it's working. And we're going to talk a little bit about just the math, just briefly tonight, but I think I want to mention it to you here. These tools have a 72% win rate. It really has a lot to do with why these zones are plotted. It really is the math of probability. So we'll talk about that tonight as well. Super stoked. Okay, let's get into the questions, shall we? All right, first up is, let's see here. Hey there, how are you? Gypsy, I haven't seen you in a while. Great to see you. All right, so let's see what our question is. And thoughts on AMD? Yeah, sure. Let's do this. Let's take a look at the daily. We'll keep the hourly in view. And AMD, you bet. This one's an interesting one. And this is a market I want to buy. Let me tell you why, what to look at. Structure. Green, slightly neutral, blue grab candles, but bullish. That means I want to focus on support. How are you finding support? Whether you're using Darvis, whether you're using, whatever it is that you like to use, you'll see what's on my chart here. By the way, of course, the V-score is here. Why would I not want to combine volume with volatility, right? You don't have to, but if you have both of those, why not use more of those 4 factors of trading? So I have the V score sitting at support. I've got the market neutral but bullish. I've got the DPMR here. I'd like to set up a buy. Yeah, Gypsy, I'd like to set up a buy. Is this going to be a situation where it's Nvidia versus AMD? I don't know that I see, Gypsy, sort of this adversarial relationship between the two. It's oftentimes the situation where if Coke does well, Pepsi does well, right? I don't think we have to see one do well for the other one to do poorly, or one do poorly for the other to do well. I think that high tide could lift all boats. And Nvidia is an even better buy than AMD would be, but they're both buyable, right? So I would look to the long side. The structure on Nvidia is excellent. Sitting at the mean of the V score, green structure, bullish structure. Yeah, keep an eye on those DPMRs. And where are they sitting? About 202.5 to 199 is what I would take a look at. All right. Next up is Alex. What's my favorite resource for controlling our most important indicator, the 6 inches between our ears? Yes, the most important for sure, but often. So what's my favorite resource? My favorite resource is, well, let's be frank. We can't start this game undercapitalized, right? We cannot. We need a scalable mindset. We need a really good understanding of position sizing and risk management. That's the holy grail, gang. That's the only holy grail. Yes? So that's number one. We need to be confident in, I usually have the coin on my desk. Oh, here it is. I do have the coin on my desk. I love this. I don't know if y'all can see this. Premeditatio malorum, right? All terms of our human lot should be before our eyes. That includes risk, right? That's the first thing we do. So that's number one. Define risk. Define what the worst case scenario is, right? Rather than just, we'll see what happens. Second thing, I will tell you, Alex, is automation, right? We're talking a lot about automation for a reason. Automation is what gives us the ability to say, hey, Raghee's been doing this for 30 years. What does she see? Rather than me saying, well, let me know in 30 years if you can see the same. I say, if I really have a methodology that's systematic, I should be able to code it. Big shout out to the Lorna bot. And if I can code it, then you all can see what I'm seeing. You'll notice I will not draw things arbitrarily, subjectively on my chart. I don't need to. We can look at volume. We can look at volatility. We can look at support and resistance. Thank you, Darvis 2.0, automatically. So managing the mind a lot of times is not letting it go down the rabbit hole. And automation is a big part of that. And I think that's been the biggest key for me, watching traders get it right quickly with more confidence is, all right, it's right in front of me. All I need to do is read it. So that's my interpretation there, Alex. The Holy Grail, risk management, position size, automate those tools, remove the subjectivity. All right, thanks for the question. Robert, hey there, Stacy. Yes, thank you as always. Yes, everyone have a great trading day. We have a couple of interesting sessions coming up. All right, buy the dip on Nike or McDonald's. All right, so buy the dip requires, let's talk about the multi-trend. We're going to talk about the multi-trend tonight. No can do on the dip in Nike, meaning a reversion to the mean. I will not play reversions to the mean in a non-trending market. Nike is non-trending, but I'd like to be long. So what does that mean, Rog? Oversold buy. Take a look at the V-score. Take a look at the slow stow. Take a look at things like the Darvis. I'm looking at the DPMR. I'd love to get long Nike again. We had a nice DPMR set up in Nike. Gosh, when was that bought? I'd have to look at the alerts we sent out. We had a nice little setup in Nike based on those levels, and I'd love to do it again. But it's not a reversion to the mean unless I have a trend. 2 weeks ago, says the bot. 2 weeks ago. All right. So then McDonald's. Looking at McDonald's, would this be a buy the dip? Actually, this would be an oversold buy conversation as well. Ignore this weird NYSE. If you're wondering, what the heck is this, Rog? That was that weird NYSE glitch we had a few weeks back. 200 propulsion. Keep an eye on that one. Robert, 200 propulsion. Use that slow stow. Listen to me now, believe me later. When you're looking at overbought, oversold, and you want something powerful and free on the chart, I love sharing free tools with y'all. What we have here is a 21K 3D slow stochastic. The key is to use it in chop. That is what we are in. All right, next up, Kevin. Disney for long calls on the daily. Thank you so much for talking about time frames. I love how you all are saying, okay, this is the symbol, this is the time frame, because each time frame is its own slice of psychology, right? Looking at a different time frame is almost like looking at a different symbol, which is why the time frame conversation, by the way, in tonight's webinar is going to be a prominent one. You know, what happens? What's the consequence, gang? And it's been a dire one. What's the consequence of looking at time frames that just don't have follow through? What's the cost of focusing on our favorite time frame rather than one that's been tested to work in the kind of environment that we're in right now? I love that y'all are looking at time frames in that way. Okay, Disney, don't want to be a buyer. Oversold stochastic, neutral market, uptrend preceded it. Yes, long calls, now we wait for our pitch. There's a pretty good chance that we break 100. There's a pretty good chance that we could break 100, in which case that opens the door to a zone between 98.5 and 96.5. Now, do y'all see how quickly I'm able to find those zones? Because they're just on the chart. That's automation. We're not automating our thinking. We have a sequence. We're not doing this mindlessly. We're letting the platform, we're letting technology help us do something in an unbiased, instant, accurate way. I'm never going to be this fast. I can't. I did this manually for 10 years. I'm never going to be this fast, and I'm never going to be this accurate, and I'm never going to be able to cover almost 100 symbols, which is what's in these DPMR packs right now. So we rely on that process. I like the long, but Kevin, specifically from that zone, but I definitely do like the long side. All right, so then let's see. We got some comments about SPY calls, the last hour of the day. All right, it's from Joker Trader in our free trading room. Let's go take a look at the 1 hour chart. All right, so SPY's SPY, this is the ETF for the S&P. We also have, of course, ES futures, micro MES futures, as well as the very popular SPX. By the way, SPX, everyone knows, it's definitely very popular, the zero dated option, right? But a lot of folks don't know that the SPY also has zero dated options. So if you're looking to collect premium, I get SPX would likely be a really good choice. Yeah. But SPY, if you're looking to play directional, long call, long put, please take a look at SPY. It's very liquid, and it's oftentimes more affordable and scalable because of that lower cost, that lower premium cost. So then here we have the 1 hour. It's gone neutral. It went neutral last night about 9 p.m. I'm inheriting a neutral 1 hour chart. And if we're going to see a bounce, here's the SPY on the daily. Let's move this over to the right edge. There we go. So if we're going to see a bounce, getting back above the 200 propulsion, getting back above 400, and even more importantly, getting back above key levels on the ES will map very nicely here. And I do like possibly this Darvis break to the upside in this neutral environment. Let's be careful, though. We still have a lot of data to come, but at least we're neutral. And now we can start thinking about long from support, short from resistance with a shorter time horizon, meaning we don't have to be right for so long anymore looking at that 100, right? So we want to see that get above 400. You can see we're at 401 right now, heading in the right direction. Really cool. Awesome. All right. And again, when did we shift? About 8 p.m. last night. And we want to look at these markets in that 24-hour way, right? Because many of these markets are 24-hour markets. Yeah. All right. Next up, hang on. Can we look at EFX? Sorry, J. Charles, EFX. Sure. 200 propulsion could be a nice minor low. We're still a downtrend on the 1 hour. So one hour is shorts only in case we continue to see pressure. Daily is neutral. We've got an oversold stochastic. This is looking like a great candidate, Jay, for a minor low pattern bounce. Yeah, good stuff. So Nathan asked, do I use ticker range time frames? If yes or no, why? Nathan, there's four. So this is my thought. And it's not as if there's something good and bad in trading. It's what information do we need to make a confident decision? And to me, I've noticed after teaching so many traders for decades, thousands around the world, I've been I've had the pleasure of doing that. I realize the more traders understand price, which we all do, right? That's usually where we start and unfortunately stop. If we understand price, we're good. If we can trade what we see, we've got an edge over 70, 80% of market participants that are ping-ponging with news. If we can add volume, price-based volume, think the volume max tools. Now we're looking at two factors. All right. What if we add time, respecting hot zones, respecting time of day, respecting certain monthly phenomena like pit bull lows, like Friday expiration, end of month shenanigans, non-farm payroll, those monthly occurrences. We are getting another edge with time. The fourth factor, the one that we only measure here because there's really no other way to do it. Not to be braggadocious, but okay, I'm going to toot my horn for a second. No one's measuring volatility. We talk about volatility. We know there's volatility, but where's the measuring stick for it? Right? Where's a historical measuring stick for it? And that fourth factor, and usually the last factor that most traders add to their trading, is volatility. So because I use time as one of those four factors, Nathan, I don't use tick charts. Do the other three factors apply to tick or range? Absolutely. There's nothing wrong with them, but I like to use time because that's one of my four factors that increases my confidence to take a trade. All right, next up is Wells Fargo. Wells Fargo is a symbol that we are looking to get in. Wells Fargo is on our list in the Sector Secrets Mastery Room. And by the way, a lot of folks have asked, Rog, what do you do in your mastery? One of the things that we did with the upcoming webinar class is that when we do talk about the DPMRs and things like that, one of the things you'll get with the class is access for either 1, 2, or 3 months with me in the mastery after the class that we're going to have on March 11th. So just kind of putting that out there for those of you that have been wondering, yeah, Rog, I know you're day trading in the mastery and you're swing trading now too. How can I see those trades? When we do the class on the 11th, after that, we're going to be adding, actually, I don't know when the mastery trial begins. I'm sure somebody does, but I know we've included it with that class. And you can learn more about it tonight at 8, simplertrading.com/auto. Weekly is bearish. Well, BB, let me show you this. See this down in here? See that lower row? That's the multi-trend. I know a lot of you have it. And if you have it, gang, there is not a single indicator or strategy that's not going to benefit and increase. There's not much I can say that I can tell you it's going to increase the accuracy of your strategies. This is the one I'm going to tell you is the beginning of every strategy. What is the underlying market? So no, this is not a bearish chart to me, based on an objective process of looking at 4 moving averages, how they're interacting with each other. And then I've got this sort of traffic-like simple green, red, yellow environment. This is neutral. This is neutral. And if we can get above the weekly 200, this is neutral bullish. So I see this as bullish, and we are looking for a long setup. So, when I'm telling you all that I'm bullish and something like this, I've got some skin in the game. I want to get long. So it's not just random, this could happen in the next few months. No, I've got skin in the game. All right. All right. Next up is, a fan favorite, Tesla. How do you apply the HPMRs to Tesla? Well, so let me mention this. It's a great question you have on the HPMR. HPMRs, gang, and I know a lot of you have them. One of the things that Lorna Bot's been doing that I don't know when we're going to have time to talk about this, but Lorna Bot's been looking at HPMRs with a lot of some of the other popular, simpler indicators. Maybe we'll talk about that in the coming weeks, so stay tuned for that. But one of the things HPMRs are specifically for is day trading. So if you're wondering, Rog, I have HPMRs, can't I just use those? If you're day trading, absolutely. It's one of the most powerful things you can put on a chart, right? So for Tesla, remember, every hour, these are going to shift. Deborah, every hour. So look at the underlying structure and then determine whether or not you need support to buy from, or resistance as a target, or resistance to short from, or buy puts from, and support as a target, right? When we start getting out to 30-minute charts, 1-hour charts, 4-hour charts, daily charts, now we're talking about potential overnight exposure, short-term swings, And that's where the DPMRs come in. So if you're already using HPMRs, then remember, you've got the day trading volatility tool. Now we're going to be adding the swing. Okay. All right. So that's it, gang. Thank you so much, as always, for the questions. I'll be back tomorrow, 9 a.m., but I really, really am looking forward to seeing you all tonight, 8 p.m. Eastern. If you can make it live, great. If not, go ahead and register. We'll send the recording out to you later on so you can watch it at your leisure. Be good to each other, gang. I'll see you tomorrow.